it's still the final trading week of 2025. Today, it's all about taking stock of the year and getting an outlook for 2026. I'm Laddie Williams. This is Business Morning. Let's get a review of what played out in the Nigerian exchange yesterday. Added about 542 billion naira in market value yesterday as investors returned, from the holiday break, pushing total market capitalization to 98.4 trillion naira. On the road to 100 trillion at this point. Trading activity, that was mixed. Volume dipped about 16%, but turnover, and that jumped 22% to 35.5 billion naira. While the number of deals surged nearly 150%, pointing to renewed, market engagement. The breadth there was positive, with 41 gainers against 37 losers across 128 stocks there. So there you have it. That's the trading activity yesterday for the market. Then we see EcoBank Transnational led the rally with a 10% jump alongside, strong gains in Guinness, Nigeria, Honeywell Flour Mills, and Austin Lars. And we also see MTN Nigeria also added to share price yesterday. On the flip side, International Energy Insurance topped the losers chart, down about 10%. So all eyes now turn to whether the post-holiday momentum can carry the market into year-end. Santa rally, at this point, we can smell Santa right there, in the markets. All right, to other stories now. In a corporate shake-up now, Nigerian markets are buzzing again. Billionaire investor Femi Otedola divested his over 70% controlling stake in Geregu Power PLC, a landmark $750 million deal restructuring the power giant's ownership as Abuja-based MAM Energy Limited takes control through its acquisition of Amperian Power, the vehicle that held Otedola's stake. The move, one of the biggest private power divestments in Nigerian history, and that's in the history of Nigeria, was financed by a consortium led by Zenith Bank with Black Birch Capital advising, and marks a strategic pivot for Mr. Otedola's investment focus. Market watchers are now tracking whether Mr. Otedola's exit and renewed investor confidence can redefine the sector dynamics heading into this year end. Let's get a check on oil market now. See crude benchmarks with little change today, pausing after a more than 2% surge in the previous session, driven by, fresh geopolitical tensions. We see Brent crude there down again, 0.23%. It's like deja vu at this point. Starts the week strong, then the next day we see a pullback. That's playing out again. WTI crude, $57.95 a barrel, down 0.22%. We're still seeing the range trade right there in the oil market. And we're seeing reactions to Russia's accusation that Ukraine targeted President Vladimir Putin's residence. Investors are now, watching developments around Ukraine peace talks, weighing the risk of potential supply disruptions in an already tight global oil market. So that's what's driving sentiment right there in the oil market. And sharply as hot money flow eases, Nigeria's capital inflows are sending a strong signal of changing investor appetite. Foreign direct investment surged by nearly 700% in the third quarter of 2025, climbing to $720 million, even as foreign portfolio inflows, that slumped by over 50%. The latest CBN balance of payments data points to a clear shift away from short-term hot money towards long-term investment in the real economy, including infrastructure and productive assets. Despite a narrowing current account surplus, the naira remained broadly stable, reinforcing confidence in Nigeria's macroeconomic direction. And talking about money now, see transactions through ATMs nearly tripled, surging by almost 198% to 36.3 trillion naira in the first half of 2025, while volume jumped by 73%, according to new CBN data. Point-of-sale payments also recorded strong momentum, with transaction values climbing over 70% as mobile payments crossed 213 trillion naira, reinforcing the shift towards digital finance. Even, checks posted modest growth, clear evidence that electronic payments are now firmly, driving Nigeria's financial system. So that's right. That's the transaction right there. ATM transactions jumping again in the first half of 2025. All right, let's look at all the stories now. Let's look at borrowings in its International Debt Report 2025. The World Bank says Nigeria and other sub-Saharan African economies must urgently diversify exports and implement fiscal reforms as debt levels and servicing costs continue to climb. Nigeria's total public debt rose to 152.4 trillion naira in the second quarter of 2025, even as growth remains, subdued. It plans to borrow nearly 18 trillion naira in 2026. Analysts warn that without structural reforms, debt pressures could deepen across the region there, and that's according to the latest there by the World Bank. All right, to other matters now. We see under new rules, individuals will no longer need a separate tax identification number. Your national identification number, that's NIN, automatically becomes your tax ID. And for companies, the Corporate Affairs Commission, that's the CAC registration number, will serve the same purpose. To make it easier, a new tax ID portal launching in 2026 lets Nigerians and businesses retrieve their tax ID online using just their NIN or CAC number. So all of that, we're still counting down to January 1st there when the tax laws go into action, and definitely businesses, households, everyone is strategizing for the new year. All right, let's look at budgets now. We see Abia State Governor Dr. Alex Otti has signed into law the 1.16 trillion naira appropriation bill for the 2026 fiscal year. Speaking after assenting to the bill in Isialangwa South, the governor said the budget is aimed at consolidating the gains of his administration, supporting business growth, and improving social infrastructure to enhance the quality of life for residents.
If more thanks go to the House for expeditiously attending to the bill, crunching the numbers, spending sleepless nights to ensure quick passage of the bill. I want to thank you for the hard work. This is a government that believes that we need to empower our people legitimately. Our definition of empowerment is creating the enabling environment for our people to do their business and do their stuff, and then of course also implementing and creating social infrastructure in terms of health, education, and environmental issues having a place still, other than the roads and the bridges and the other hardcore infrastructure. So once you have that overarching view of government, the rest will be details. I'm happy that we are all going in the same direction.
Well, obviously, the Anambra State Governor, Professor Chukwuma Soludo, signed the 2026 appropriation bill into law at the Lighthouse in Awka. The budget was raised to 766 billion naira by the State Assembly to support economic growth, infrastructure, and social programs. The governor also signed 3 other bills on nursing, education, tax administration, and correctional service.
You then remember that what was submitted to the Assembly was about 757 billion, but in their wisdom of the various reviews, amendments, and so on and so forth, the budget size is slightly, very slightly increased from 757 to 766 billion. For the fiscal year 2026. We now get to work. So, Mr. Speaker, the Deputy, the Majority Leader, the Chairman of Appropriation, and all the members of the Anambra State House of Assembly, on behalf of the government and the people of Anambra State, we thank you very much.
All right, as I said earlier, this is time to take stock of 2025 and get an outlook, for 2026. Definitely, that helps you. You learn lessons, from the current year, so that you can, so you don't make those mistakes. If you've made mistakes in the current year, you can start afresh in 2026, and you know what to avoid, so that you make the right moves. And joining us now for a special presentation, we have Mr. Bismarck Ruwani, Managing Director, CEO of Financial Derivatives Company. He's going to be giving us a special right here on Business Morning. It's great to have you, sir.
Thank you.
Compliments of the season.
Merry Christmas, Dirty December.
Fantastic.
Okay. There we go. Now, New Year resolutions are to be broken on the 1st of January. We make the resolutions on the 31st of December, and we break them on the 1st of January. But that's life.
Fantastic.
So today, we are going to be looking at 2026, because what we say is that it's now here, and lest we forget, that's the title of this presentation this morning, lest we forget. So 2025 was a defining year for Nigeria's economy, and you would see that the lesson, George Santayana said, those who cannot learn from history are doomed to repeat it. That's very important that we know that. So what are the lessons that we learned from 2025, and what are we going to do in 2026? First and foremost, the macroeconomic scorecard, then and now. 5-year average GDP growth was 2.03. In 2024, we achieved 3.38, and in 2025, we are looking at 3.9, and 2026, marginal increase of 4.2. But remember, bear in mind that the economy, total GDP in this country is $250 billion. And there's an aspiration to make it $1 trillion by 2030. That's not going to happen, because you need to grow about 15% to achieve that. But we are growing at 4%. So let's bear in mind the reality. 2 is that the balance of trade was minus, 5-year average was minus $0.804 billion. In 2024, we achieved $13.13 billion because of the adjustment of the exchange rate. 2025, 7.3, and we are projecting that in 2026, we'll make $10 billion. Well, that's not bad. The revenue, federal government revenue in 2025, this is nominal revenue in Naira terms. 5-year average was 4.8 trillion Naira. In 2024, we had 9.44 trillion Naira. In 2025, 12 trillion Naira. And now we are projecting 18 trillion Naira. The reality is that Naira of 2026 is not the same as Naira of 2000, not the same thing as Naira of 2020. So you have to actually divide what you have by 4 to get the real value when you go back to those days. Oil production, look at oil production, and that's the engine of this economy. 1.49 million barrels, 1.34, 1.46, flat, 1.52. In spite of all of the investment, we are seeing that oil production is still low. Why? OPEC, 2, vandalism in the Niger Delta, and so many other factors. Gross external reserves went from $37 billion all the way. The 5-year average was 37, 2024 was 40, 2025 45, and it's going down in 2026. The exchange rate in 5-year average was 660 Naira to $1. In 2024, we got to 1590. 2025, 1552, in fact, 1490. But we project that a depreciation in Naira to 1560 in 2026. The exchange rate misalignment, the misalignment means that you are saying, how many Naira, what the difference between the parallel market and the official market. The difference was 309, 5-year average. It dropped to 118. In 2025, 22, and now it's down to 18. The smaller this number, the more stable your currency, and the less the currency is exposed to exogenous shocks. Now, this is all red. Federal government debt, 5-year average was 12 trillion Naira. Look at what has happened. From 12 trillion Naira to 144 trillion Naira to 166 trillion Naira, and we are projecting 180 trillion Naira. So you are borrowing, but what are you using the borrowing for? Is it increasing productivity? That's the major question. But almost all countries in the world borrow. You refinance the debt, but you must use it to develop the economy and also to increase productivity. Income per head, this is where it gets very tricky. 5-year average in dollar terms, Nigerians, everybody in the country, had $2,728 per head. Come the adjustments, it's now down to $824, up to $806, and in 2026, we'll go back to 1360. 1360 is less than half of 2,000. So basically, in 2026, you'll be half as wealthy as you were in the last 5 years. External debt gets very interesting. Total average of the external debt in 5 years was $10 billion. In 2024, the external debt has increased to $45 billion, now 48, and it's projected to go to 50. The question is, what have you done with this debt? You have to have debts and liabilities. You have to have assets. You have to show the assets that you have used this to develop. Fiscal deficit, as a percentage of GDP, 3.29. The average normally should be about 3%. This would have gone all the way to 8 or 9, if not for the adjustments that have taken place, the fiscal adjustments that have taken place. So this is a sign of progress, where you're having 4.4% of GDP. Inflation average, and here you've got to be careful because there's a change in methodology, and so you have to compare apples with apples. 5-year average of inflation was 21. 2024 it rose to 33. Then we did the rebasing and brought it down to 21.02. Now it's down to 12.7. Back of the envelope analysis, always add 10 back to what you had before, and then it compares you. So basically, if this year if you add 10 to that, that's about 22. It's about the same thing as the former average. So inflation is moderating and is being managed thanks to the Central Bank of Nigeria, thanks to the Federal Ministry of Finance for ensuring that there's less of fiscal rascality here. GDP, 437 trillion, which is equivalent, right, in billions of dollars, $437 billion before our exchange rate adjustment. Now down to 252, and we expect it to increase to 285 in 2085 and 2025, and then to 334, because we are factoring in a 4 to 5% growth. Now, where is the growth coming from? Growth, exchange rate stability is number 1. Oil refining sector, number 2. This sector grew by 19% thanks to the Dangote refinery and the modular refineries. Power sector reform is lagging. Of course, the grid has collapsed so many times. Everybody in Nigeria knows that power is in the toilet. Institutional reform is a work in progress. These are the things that we have to look out for in 2026. Now, pictorially, this was what happened 5 years ago. Refineries are in a complete mess. Queues, every public holiday. Christmas, Salah, New Year, queues. That was then. Now, Dangote refinery, no petrol queues. So it tells you a lot. The economy has made a paradigm shift. And this, why is it important? It's important because petrol is used for cars, diesel is used for generators, transportation of goods to the markets, and it's a major factor in dealing with inflation. The reason why inflation came down, one of the reasons, is because of increased productivity, 1, and 2, the reduction in petrol prices. And you see, cocoa price, one thing we have to look at. This is the map, natural resource map of Nigeria. If you look here, cocoa prices average $2,000 in 5 years, but now it has gone all the way to $12,000. And so what has happened, if you look at this area here, these guys were having a boom in the past 2-3 years in Oyo, Ondo, Ekiti, and Osun State. This is the cocoa belt of Nigeria. The other zone is the oil region, the south region. The price of oil has been coming down, so this region, and then there's the oil theft and bunkering. This region is a problem. What do we have in the resource map here? In the northeast, northwest, and northeast, we have minerals, lithium and others, and that's why if you look at the crisis conflict zones, they all coincide with where the resources are. 1, northwest, where there's minerals, gold. Northeast, where there's lithium, and north central. The south, where there's oil. So resource nationalism, the only place that is safe from this is probably the Southwest, where they were enjoying the cocoa, but that won't last for too long. Next, top 5 economies in the world. We aspire to be like our leaders. The largest economy in the world is the United States. It was $29 trillion in 2024. It's now $30 trillion. The global economy is actually about $107 trillion. So USA is number 1. Number 2 is China, $19 trillion. In 2024, China was $18 trillion. So it's grown by $1 trillion in spite of all the problems they have. Number 3, Germany, $4.71 trillion last year, and now it's $4.74 trillion. Surprise, surprise, Japan was $4 trillion last year, and now it's $4.19 trillion. And look what's happening here. India was $3.89 trillion in 2024. It's now $4.34 trillion. So we are the usual suspects. Where is France? Where is UK? These are the countries to watch, and these are the ones that you have to deal with. Next slide, please. Now, what has happened over the last 50 years? We've seen 5 global recessions between 1960 and 2025. Investment contracts during this period, unemployment increases, and it also coincides with conflicts. Investors move to government bonds, gold, and reserve currencies. The price of gold 50 years ago was less than $1,000. Today, the price of gold is $4,300. In fact, looking to reach $5,000. Investors move to government bonds and gold and reserve currencies, and notably, asset prices recover faster than real investment. Look at what has happened. Please go back to the previous slide. Here, we have stagflation in 1974. That was the Yom Kippur War. Then we had a recovery in 1984, right? And look at the tech boom in 1995. Then we have the global financial crisis. We had COVID, and now the world is in a recovery path. So, but don't forget, Nigeria is 2% of the world's population and 0.2% of the global output. So we are, technically speaking, we are parasites of the economy, right? Next slide, please. So what happened? December 2020, these were the most valuable companies in the world. Total value was almost $2.26 trillion, right? That was Apple, that's Microsoft, and look at all of them. See what they are today, December 2025. Apple is worth $4.01 trillion. NVIDIA is almost $5 trillion. The richest man in the world, Tesla, he has a salary of $1 trillion. His salary is more than half of the total output of the African continent. That's the new world we are in. Right? Next slide, please. So, market capitalization, Nigerian stock market. In 2020, it was 21 trillion naira. It's now 99 trillion naira. Aladi was talking about it earlier. There's a boom period. And the average, look at the average earnings of Nigerian companies. It moved all the way from 1.5 trillion in 2020 to 9.4 trillion naira. So there's a capital market boom taking place in Nigeria. But again, will this sizzle fizzle? The 2026 is going to tell us a lot of stories about this. Next slide, please. So, who are the people driving the Nigerian stock market? Foreigners or Nigerians? Green is for foreign portfolio investors. Red is for domestic. In 2021, it was almost the domestic investors were 1.46 trillion and the foreigners were 0.4 trillion. Look at what has happened in 2025. Domestic investors are 8.35. They are 4 times the foreign portfolio investors. And look at what we are projecting in 2030. Domestic investors will be 16.6 trillion, and this will be 69.8. And this does not take into consideration the listing of the Dangote refinery, which is going to increase market capitalization by over 100%. Next slide, please. So, what are you going to buy in 2026? Again, first, if you are buying internationally, NVIDIA looks good. Microsoft, Amazon, AMD, Visa, Eli Lilly, those are interesting stocks. Apple continues to dominate, and we also like Oracle. Domestically, MTN is doing a lot of good things, and of course, they're growing rapidly. Cocoa oil, strong domestic demand. Guinness has recovered from problems of the past and is now doing well. Transcorp Power looks interesting. Never, never forget Dangote Cement, 1, Dangote Refinery, 2. This 2 alone is going to double the size of the Nigerian stock market. Next slide, please. So, 2026 will be a year like no other. Why do we say this? In January, Bulgaria adopts the euro as its currency. The Basel III rules will be postponed. In February, Lunar New Year and lasting statistics, Olympic Winter Games will start in Milan, and Cricket World Cup will begin in India. Big year. March, 250 years of the celebration of Adam Smith, who wrote The Wealth of Nations. Also, March 19, we'll have March 20 and 19, we would have the Salah, and April 4 and 5, we'll have Easter. Very close together, so we're going to have celebration time. In June, FIFA World Cup, first match in Mexico, and then it ends up in Los Angeles. On July 4, America was celebrating 250 years of its independence. In July 19, there'll be Commonwealth Games. And then August 12, there'll be total eclipse of the world. And in November 3rd, there'll be elections in the United States. Who knows what will happen? So for Nigeria, the election spending starts now, or started yesterday or last year. That's number 1. Number 2, insecurity is slow, but again, productivity without fairness and equity will lead to insecurity. Number 3, debt service will be down, but we are increasing our borrowing. Number 4, the Tax Reform Act kicks in. Everybody says, how is it going to affect me? Nobody knows. But when we get there, the sweetness of the pudding is in the eating. But again, taxation without legislation is inflation. Now, PMS import duty must happen in the first quarter, 15% to protect the domestic refineries and productivity. So it's a year of interesting year of imponderables, but who knows? What you see is what you get, but what you don't see is what gets you.
Fantastic. That was quite an interesting one, Mr. Rwani, and I've been so entertained. I had my popcorn here, watching this, presentation, and definitely a lot to chew on,
yes.
At this point. Looking at how much, debt has risen so far, yet we don't have that much, to show for, the rise in debt.
He who goes a borrowing goes a soaring.
Soaring.
Okay.
Then we have, inflation moderating. That's in the good side. GDP rising. Oil refining, sector, we've seen that also growing about 19%. That's a great one. Interesting, Adam Smith, 250 years.
Yeah.
Wow,
he wrote the Wealth of Nations.
The Wealth of Nations. I love that book.
There are 3 types of it. There are economic thinkers.
Right.
There are economists, practicing economists, and there are quacks. So in Nigeria, I think we have more quacks than economic thinkers.
Fantastic. Well, that's quite interesting. But, 250 years, that's quite incredible. Yes. The U.S. also celebrating 250 years of independence. Then I love the way you put the tax reforms there. We'll all taste it.
Yes. The sweetness of the pudding is in eating.
Yes,
but don't forget,
eat it.
The reason why you had the War of Independence, no taxation without representation.
Right.
That's 250 years ago. That's where the War of Independence, and right? Again, taxation, but it's what you do with the tax, right? So far, we've been able to keep inflation down. So far, the Ministry of Finance has been able to keep things on even keel, block leakages, but now, sending the money back into the system so that there can be an improved welfare of the people and happiness. That's the challenge. So, again, the international community is watching. They like what they see at the central bank. They like what they're seeing in the Ministry of Finance. They like that. And so our outlook and ratings are good. But, again, if you don't recycle that money, and if it doesn't turn into welfare and happiness of the people, like remember what I said, productivity without equity will lead to insecurity. And with insecurity there, our bets are off.
Fantastic. Let's see how to make the people happy.
Yes, that's the name.
With the next one. Thank you so much, sir, for this presentation. That was Mr. Bismarck Rwani there, taking stock of what's played out in 2025 and what to expect in 2026. We'll take a break now. When we come back, we'll look at what's played out in Nigeria's telecoms industry and what to expect in 2026. That's the moment. Just stay with us. Well, 2025, a defining year for Nigeria's telecoms industry. Operators, battled rising operating costs, FX pressures, and infrastructure challenges, even as data demand surged. 5G expanded, and digital services deepened their role in economic activity. Even though we've seen the Naira quite stable most of 2025, regulatory reforms, tariff adjustments, and infrastructure investment also, reshaped the sector, raising fresh questions about, sustainability, affordability, and growth. Now, we look ahead to 2026, and what lessons stand out from 2025, and what should, consumers, investors, policymakers, what should they expect next? Joining me to review and get an outlook for the telecoms industry is Mr. Oluwole Abegunde, Director, Market Research and Insights at Insights, joining me right here in the studio. It's great to have you, sir. Good morning, and compliments of the season.
Thank you for having me, Ladi.
Yeah, so, we would love to take stock, at this point. So looking at, 2025, so far, the telecoms industry, that's, been on the radar, everyone, at this point. We're always on our phones now, consuming data, making calls and all of that. So, for you, how did 2025, play out for the telecoms industry?
It's been good. 2024, 2023 were not so good years for the providers because of the tariff issue. And this time last year, we were talking about if the NCC will agree for a tariff increase or not. So they agreed in January, and that has helped stabilize pressures they had from FX exposures and things.
But that was all the way in January.
Yes, but there's been almost near immediate effect on the upside, because you see them declaring profits now, quarter after quarter, and we expect that at the end of the year, when the results come out, it will be positive also. 2023 losses, 2024 losses, but this year has been a different direction, and one of the key reasons is because of the policy change from the NCC that allowed 50% growth, increase in tariff. Also, as Nigerians, we've grown accustomed to that lifestyle change. As you said, our mobile phones, people are on their phones more, watching TV, movies, people are betting more, sports, entertainment, yes, education. So there's a lot, banking and finance, fintechs. So people are getting more used to services on their phones, and that's generating increased revenue for the telcos. Right,
and so it's been great, for the providers.
For the providers, yes.
So far. And I'm wondering, has it been that great for consumers? In 2025?
So that's a double-edged sword.
Right.
So the consuming services that they have to pay for, and the services come at a cost. So consumers have to pay that cost. So telcos are not charity organizations, unfortunately. They run a business. And if the business is no longer profitable, then it's hard to attract investments. The top two telcos in the country are global brands, MTN and Airtel. And they have investors across the world that they report to. So if the investments in Nigeria don't make sense any longer, it's hard to compel investors to put in money into the business. Hence, although consumers are having challenges with the prices and all of that, but it's a burden we have to bear to keep the industry alive.
But have the consumers, have they gotten better service? It's one thing, raising prices, but are the consumers getting better service?
So again, it depends on your area, your location, a lot of things. Quality of service is yet to grow significantly in the market, which I believe the telcos or the ISPs are not actually maximizing as a USP to project themselves in the market. Nigeria is almost 30 years as an industry, telecoms industry, yet quality of service is a key differentiator. And none of them has yet to say, okay, look, I'm the guy that will be the telco that if you want to make a call, it goes through. Data goes through. So for all the telcos, all the ISPs in 2026, that is something they might need to look at and say, look, forget the branding, forget the razzmatazz, the marketing. Let's be the company that guarantees quality of service end-to-end, whether voice or data.
Right, and talking about data, we've seen, some consumers, have to pay more, trying to get, better service, when it comes to, data speed. But most of the time, some of them get disappointed, even when they pay more. We've seen that happen. But, if we look at the state of Nigeria's telecom industry now, we see mobile subscription growth between 2020 to 2025. The base, that's from about 170 million to 182 million. Tele density now above 80%. Steady growth, that's reflecting resilient demand, for mobile services. So the demand is there.
Demand is there, yes.
Demand is strong.
It's a young population.
Right.
So this year alone, you can imagine how many youths, tens of millions of youths become from 17 to 18, that the parents will allow access to social media, Facebook, Snapchat, TikTok and the likes. So that number will also grow into the next number for 2026. So we expect that growth pattern to continue in terms of subscriber base.
Right. And we have kids, 6 to 10, also trying to get on the internet.
Yes.
Trying to get all of those tablets. They want to play games.
Even schools, in terms of learning, the younger kids, introduce them to the internet at the very
coding
and all of that.
Right.
So that also amounts to growth for the telcos.
Right. Okay, so were there any surprises, for you looking at the industry in 2025?
Not necessarily, because nothing significant has changed except for the tariffs that
that wasn't much of a surprise.
Shut up, yeah.
Or was it a surprise?
People weren't sure if the NCC would agree to the increase. But I guess after listening to all the stakeholders and they realized that if it didn't happen, because when you have your biggest telcos in the country declaring losses year after year, back to back, then it's concerning. It means there is no incentive to put more. So if you want them to put more, then you have to give an environment where they can reap their investments back on the profitability plan. So that helped. But beyond that, except for Airtel, we saw Airtel announcing this direct-to-device thing with Starlink to tackle quality of service in the rural areas and also in urban areas. So that could be a big shift in the market in terms of how they are thinking about the market in 2026. But again, like
I'm still wondering how that partnership is really going to work. That's the Airtel, Starlink partnership. Because in my mind, I feel they're competitors. Starlink is coming into your market, at this moment, but we're seeing a partnership here.
So it's going to be a collaboration.
Right.
So Starlink will essentially be a wholesale player selling wholesale bandwidth to Airtel in areas where terrestrial bandwidth is a problem for them. So, for example, you and I are on a call and the cell site is jammed. We can't receive a call. Your SIM automatically switches from whoever your provider is, IHS, whoever, to Starlink. So it's just an automatic switch that allows the quality of service not decline wherever you are across the country. So in that way, they are not competing. When it comes to fixed broadband and stuff like that, being an ISP, then there's competition. But on the mobile platform, no. Airtel needs Starlink for that.
Right. So is this partnership, is it going to move with other providers, other Nigerian providers? Is it just
potentially,
Airtel
if it goes as Airtel foresees it goes. Because again, we're trying to solve this critical problem of quality of service. Telcos can't guarantee you make a call, it goes 20 minutes uninterrupted. You want a market where you can have that kind of service and people can have value for money. Not people calling and dropping and switching from WhatsApp to voice calls. You want to be able to offer that kind of level of guarantee. So if that partnership with Starlink encourages that, and I'm sure MTN, T2, Globacom will also go the same route.
Right. And, talking about, going back to the tariffs now, did that change, consumer behavior much? Or did, consumers continue to demand regardless?
It's come to stay now, mobile connectivity. So bank transfers, AFCON is on now. There's a lot of betting going on. People are betting regardless of the tariff.
Yeah, the guys with short games.
Short games.
Right.
People are ordering food regardless. What's going on Amoke the other day? People are doing all of these things regardless. People are going to school, learning, distance learning and all that. People are watching services online, church services online regardless. So in terms of impacting consumer behavior, not necessarily because the services are needed. So we expect that more and more, even from an enterprise perspective, not just consumers now, businesses also need to communicate with suppliers, with their partners across the world, locally, internationally. So that need, that demand for connected services, data and voice will always be there in the country. Yes.
And I guess another bright side of 2025, we've seen the Naira stable, most of the year. And, definitely that will play into the operators. Remember, it was FX losses, before now. So I guess that's behind most of the operators.
Yes, for now, as long as it remains
for
stable.
now.
For now. Unfortunately, a lot of our tech is imported. Our servers, our radios, they are from the US.
Because the Naira is still weak.
Absolutely.
There's still pressure there.
And whatever the telcos or the ISPs have a limited shelf life that they have to refresh over time. So when the time comes to refresh again, then they look at that cost now comes into play. Hopefully by then the Naira has come down. One thing that the NCC can actually do again to support the industry in that regard is to allow these telcos pay for licenses, spectrum now, in local currency instead of in FX. That will significantly help. Because it means if you're paying
because the NCC
Naira,
can afford to take Naira.
Naira, yes.
You don't have to take dollars, for
yes,
spectrum.
For spectrum, yes. So if NCC can allow that to happen, then of course the telcos are in a better place to access and pay for spectrum when the license needs to be renewed.
Right. So, definitely 4G, 5G rollout, how did it all play out, in 2025? I know sometimes I see 5G on my phone, when I've tried to, use the internet. So what kind of progress have we seen?
5G has been slow, unfortunately, and I believe it's a supply side problem. There has been no compelling use case from the supply side, which is the telcos now, to make consumers, you and I, switch from 4G to 5G. If you go back to the generations from 1G, 2G, 3G, 4G, there has been significant lifestyle changes that compelled users to go on those technologies. 1G was because it was from wired technology to wireless now. 2G was because 1G was analog, 2G is digital. We can call, we can text. 3G, there was broadband, some internet activity on your phone, so you were compelled to even change your devices. 4G then, proper broadband, streaming, Netflix, WhatsApp calls. So you had to go on. The service was there, the USP was there, compelling people. But for 5G, there's nothing significant that compels me to be on a 5G network right now. Right now, there's nothing that 5G can do that my 4G cannot do. So why should I? So until that supply side problem is tackled and solved, and it's not just Nigeria, it's globally. Yes, it's global, it's not just Nigeria. So it's not a Nigerian challenge, it's a global challenge. Until that is solved, 5G investment will still slow down.
All right, so, definitely it sounds good that it's not a Nigerian problem with 5G, first of all. But, looking at current investment levels, in the sector, do you think it's meeting, kind of demand, we're seeing in this season?
It's been good. Lately, I've been seeing one of the telcos investing hard in fiber across the country, which shows they're seeing something there. So again, you want to have an industry where there is an incentive to put in money because you're seeing that there are opportunities, whether in Lagos, in Abuja, in Port Harcourt, Ibadan, Kano, wherever. So till the end of 2025, we're seeing a particular telco, I don't want to mention names, putting money in that space, which is encouraging. Again, the Airtel Starlink one also is encouraging because it means that they're thinking about pockets of areas in the country where there is no connectivity yet, and how can they maximize opportunity in those spaces. So, of course, yes, we're seeing investments. It can only get better, and we want it to get better. That's what we want.
All right.
Yes.
So we've looked at the providers and, consumers at this point. We did talk about, the regulator giving a green light, for tariff hike in January. What else have we seen from the regulator in 2025?
So NCC has been very active, one of the most active regulators in the country. So what they did in terms of the tariff was awesome, allowing that to fly through. I believe one of the things NCC should be looking at now is, because Nigeria is mostly a mobile-centric telecoms industry. which is not healthy. Fixed broadband development, adoption in Nigeria about 1%, super low. There is no advanced country that has a proper digital economy that has that kind of numbers. The US about 40%, China about 40%, the UAE, Saudi about 40%. We are about 1%. And we're talking about building $1 trillion economy. That can be built on a fixed broadband base of 1%. What the NCC can do is push, like they've been pushing good policies recently, push policies that ensure that fixed broadband adoption increases in the country. And how does that happen? Align federal, state, and local in terms of right of way, and allow these things, because everybody has, there are stakeholders everywhere, but there needs to be that national interest that aligns everybody together, that this has to be done. We want fixed broadband adoption in Nigeria to grow by 10% by 2030. This is what we need from the federal government, from the state government, and from the local. Everybody aligns and agrees, and we can push. We can't continue to be a mobile-centric market. It is not healthy for our future growth in terms of even global standing as a hotbed for investment in connectivity in the region. The markets that have fixed, the SMEs have better opportunities to play in that AI market, data center market, cloud market. We can't. We might only be able to play in the YouTube market, which is not what we want. We want that diversification across the spectrum of services that can be delivered. So NCC can help encourage policies that will push fixed broadband growth in the market.
All right, so much to unpack there, and definitely I see some optimism, from you going into 2026.
Absolutely.
At this point, hopefully we'll see more investments and, affordable data for consumers, because how consumers, sometimes we complain about some providers sucking our internet. Hopefully we don't have to, worry about that, in 2026. Thank you so much for coming on the show today. Help us unpack this industry. Mr. Oluwole Begude is the Director of Market Research and Insights at Insights. Thank you so much for coming on the show today.
You're welcome. Anytime, buddy.
All right, we'll take a moment now. All right, to the global economy now. See a major development in the global semiconductor industry. United States, that's the U.S. government, have granted annual export licenses to South Korean tech giants Samsung Electronics and SK Hynix, allowing them to ship U.S.-made chip-making equipment to their factories in China for 2026, and that's according to sources familiar with the matter. The move comes after Washington revoked broader license. Broader licenses right there, waivers earlier this year, tightening controls on technology exports to China, and amid rising geopolitical tensions. Other new system approvals for semiconductor tool exports will now be reviewed annually, a shift from previous indefinite exemptions. And RBC Capital Markets have downgraded the shares of Digital Bridge Group following yesterday's announcement that SoftBank Group is set to acquire the digital infrastructure investor in an all-cash deal valued at $16 per share, roughly about $4 billion in total. RBC moved Digital Bridge rating from outperform to sector perform, citing its expectation that the acquisition will receive approval and close as planned. The bank also trimmed its price target to match the offer price, underscoring how strategic buyout has reshaped the firm's outlook. Under the terms of the deal, unanimously recommended by a special board committee, Digital Bridge is expected to keep operating as a separately managed platform under CEO Mark Ganzi once the transaction completes, likely in the second half of 2026. And Israeli Prime Minister Benjamin Netanyahu and U.S. President Donald Trump met in Florida and signaled a push towards more peaceful relations between Israel and neighboring Syria. Netanyahu emphasized Israel's desire for a peaceful border with Syria, underlining a shift towards de-escalation after years of tension. President Trump echoed the sentiment, saying he believes the two nations can get along, and expressing confidence that future cooperation is possible. And in U.S. political and economic news, President Donald Trump once again threatened to sue the Federal Reserve Chair, Jerome Powell, accusing him of gross incompetence over the handling of renovations at the Federal Reserve's Washington headquarters. The president renewed his criticism during remarks in Florida, taking aim at what he describes as mismanagement and escalating costs tied to the central bank's renovation project. And in global markets, we see Bitcoin that slid back towards the 87,000 mark, losing ground after another failed push above the $90,000 level as year-end trading volumes remain thin and institutional demand weakened. The world's largest cryptocurrency was trading about 2.5% lower early Tuesday, highlighting resistance near key price levels. Amid subdued participation, market watchers say sustained outflows from U.S.-listed spot Bitcoin ETFs are a significant drag on prices as investors rebalance positions and pull capital from crypto-related funds. That's it on Business Morning. Thank you for watching. I'll bring you more updates on what's playing out with markets that we track. That's at 1:30 on Business Incorporated. Thank you for watching. I'm Ladi Williams from me and the team right here at Channels HQ's. Bye for now.